Howdy, y'all. Welcome to the weekly wrap up. I'm Raymond Dahlman, president of DSA Financial Group. Want to follow up on the big headlines this week and what's been going on in the market and in the economy. So, hope everyone's doing well down in Texas. I know they've gotten a lot of cold weather and a lot of power outages. So, hope everyone's fine. I haven't heard from anyone other than my dad. He called yesterday and said he has coronavirus. So, I guess if there's anyone out there who knows him, maybe give him a call or check in on him. I'm not too worried. So, anyways, all right. Well, let's dive into what's been going on in the world over the last week. Let's check the headlines on CNN first. Let's see. The House Democrats' relief plan is in the works. Actually, I have an article I'm going to talk about it a little bit later. Going into some detail on that from someone I have a lot of respect for, and I really value their opinion, and they're not really in favor of it. So let's see, anything else of any real excitement? NASA landed something on Mars, big deal. We got bigger problems here on Earth. Animal cruelty and Garland. Let's go over to the right side of news. Fox. Let's see, Ted Cruz, Cuomo pushing narrative for abandoned. Oh my God, I swear. The things that qualify as news on the big news channels is kind of sad. So don't really see much on Fox. That's Kanye's getting a divorce from, or Kim's filing a divorce from Kanye. That's important. So, well, I do want to talk. Here's a picture of Rush Limbaugh. I know many of you may not like Mr. Limbaugh or liked Mr. Limbaugh. I actually haven't really paid much attention to him probably since the 90s. My political tastes have changed a little bit since then. But I do want to spend a moment talking about, because he actually is one of the reasons I really got as interested into politics as I am now. It was the 92 election. I was a senior in high school, and Rush had a TV show. I think it was on like Channel 39 in Houston, and it was on late at night. But I was really getting interested in that election. It was the first one I was going to be able to vote in, and I didn't certainly agree with everything he said, but it takes balls to get out there and state your opinions on things, because you know what. Not everyone's going to agree with you, and that's why I have no problem saying what I think, because these are my positions and my beliefs, and if anyone has a problem with it, kick sand. So, anyways, it's sad that Russia's gone. Like I said, he was, love him or hate him, he definitely was someone who he definitely could spark some ire in people. Now, I'll leave it there. So, all right. So let's take a look at what's going on in the markets. Let's take a peek at the market monitor just to get a big picture look at how things are going on right now. Today, it looks like mostly greens are in the green side of the markets: real estate, financials, energy. The red side appears to be consumers, discretionary and staples, healthcare, utilities. Let's pop out to the last year and see what this looks like. Over the last 12 months, consumer discretionary has really done well. I mean, a lot of people have been trapped in their houses and haven't had a lot to do. Information technology, obviously, again, when you're working remotely, these companies are going to do really well. But you can see the things that have done poorly: energy, utilities, and real estate. I don't think real estate's really a shock. I know last year, when this was all beginning to start in my client meetings, that was something I talked about quite a bit, was that I would expect that the commercial real estate sector will take a beating over, at least the next couple of years, until we really figure out how all this is going to shake out over the long term. I personally wouldn't want to go out and build a high-rise building, because you don't know if it's going to have tenants in it. So Utilities and energy, I would assume that those have gone down probably because of the, people aren't driving as much. Also, with less people working, there's probably a backlog in production. I know that's been the big problem in manufacturing, is that, people are, the factories are open and ready to go, but unfortunately there's a lot of backlogs along the way. So, all right, well, let's go over to some economic news. Let's see what's going on there. U.S. factories growth has been slowing down. Again, not really surprising. With clients over the last year, I've shared a lot of charts, showing how GDP and gross production has slowed down, and that again is leading to lag times and slowdowns in the manufacturing sectors. So there was a slight drop here for February from January's numbers. We'll see. Let me click out here to a 5-year chart and see what that looked like. Let's see, a year ago at this time. I mean, we're doing much, production-wise, it looks better on the, from a year ago, but we did have a huge drop-off, so we're playing a lot of catch-up right now. So, all right, let's click back and see. Oil posts first negative week. Oil prices have been climbing of late. We can see since last May when they bottomed out, down below 30. They're back up around $60 a barrel. If we pull this out to a 10-year chart, the good news is we've been doing enough alternative exploration in the oil and gas fields that it has kept oil prices relatively low the last, 5-6 years. But, they are starting to climb up from, I guess, what you would call the average over the last, 5 or 6 seasons. So, again, if we go back out even further, historically, much better than where we were, during the aughts. But oil prices are certainly higher than they were in the early 2000s and late 90s. So something to pay attention to. Whether or not you drive a lot, you still have to put gas in your cars, and like diesel in my truck. So, and I live out in the middle of nowhere, so it's a 30-minute drive just to go get groceries. So those, even though I only make 1 or 2 trips to town on a typical week, that adds up over time. So. All right, let's take a look and see other stocks changed little. Gold has been, slowly, trickling down since its peak, last late summer. It peaked out at around, let's see, about a little over $2,000, and right now we're just under $1,800. So, it has waned. From what I've been reading, there's been an increase in yields on treasuries, so that's made those a little more. There's been a lot more demand for that as opposed to precious metals because people are feeling a little more at ease, I would assume. But again, I wouldn't get too excited about the dollar right now, just because of all the dollar creation that we've talked about, or I've talked about with clients over the last year. We're playing a real dangerous game. So, all right, well, let's click over and look and see how the jobless numbers are doing. They came out yesterday. We had 861,000 that applied for initial jobless claims. The previous week was 848, so it's not great. Again, I know I harp on this. The average over the last couple of years, the weekly jobless numbers were around 200 to 250,000. We're sitting at the 800 to 900,000 level. So there's still a lot of people filing for unemployment. Excuse me. And there's also, like I said, a few minutes ago, there's a lot of production that has been slowed down. So, we're not working at full capacity, and I certainly would like us to, get back on track, get able bodies back to work. There are no free lunches in this world. So, all right. So, continuing jobless claims. Let's take a peek here. About 4.5 million people. Last week it was a little over 4.5 million. So, again, it's it is trending down. Those are positive. That I hate to always dwell on the negative. These are positive signs that this is continuing to trend in a negative direction. But like I said, when we go out a little bit, typically you would have less than 2 million people on the unemployment rolls at any given time. Today we're around 4.5 million. So there's a lot of people out of work, and I personally don't believe that a $1,400 stimulus check is really going to do a hell of a lot of good for most people. That's like half a mortgage payment for me, so I just don't see how that's going to help anybody in the long run. But anyways, all right. So like I said, I did want to talk about an article that I had read a few weeks back. It was an interview with Jeremy Grantham. He's a investor, economist, all around smart guy. He's someone that probably more than a decade ago I started following his work. And he's worried that this new stimulus that again is back in the news today, is the bubble that we're already in due to a lot of the dollar creation. This is only going to make it worse. Just because we're going to have to, the Fed and the federal government are going to have to create dollars to be able to send that money out. Unless there's a piggy bank somewhere at the Treasury that we're not aware of, we're $28 trillion in debt. I think each American owes over $100,000 in debt back to the government. So I'll attach a link to this article. I'm not going to read every bit of it, but like I said, his opinion is that it's just going to lead to a more dangerous bubble, and it's going to exacerbate the longer term problems that we're going to have to dig our way out of. And the analogy I've used a lot over the years with clients with our debt with the federal government is, imagine your neighbor, they're living on government assistance, that's paid them like, $30,000, $35,000 a year. And, they've got, $300,000 in credit card debt. And, you come over to say hi and just talk about what's going on. And they're telling you about the new pool they're going to put in. And you're looking at them like, dude, you're broke. You're living off of government assistance. I'm paying your bills, and you're going to put in a pool. What the hell? So it's kind of the same thing with with the federal government. It's broke. The government's broke. We owe the money, the citizens, and I'm kind of getting fed up at this point. So all right. So like I said, I'll link to this article. You're welcome to read it. And like I said, it's not real long. It's probably take you about 2 minutes to read through it. But like I said, it's this is someone who's not just some hack that you're going to see on MSNBC or Fox Business. This is an actual guy who's investing in the market like myself, and it's concerning to most of us who handle other people's money of what's going on right now. So, all right, let's take a look at how the markets did this week. Here's the Dow Jones. It looks like it was up about, my cursor will come over here. And it's moving real slow. And it looks like the market, about 1/3% this week. So again, not huge in the Dow. How'd the S&P do? It looks like it was down a smidge. Come on. And maybe just down less than 0.5%. And let's take a look at the NASDAQ. NASDAQ was down, more than the other indexes. So, it is what it is. Not everything can go up on a straight line. So, but as we can see, from that previous chart with the heat index, the red, the green, technologies are doing really well right now. And short of having an energy crisis where we couldn't power our gadgets, I wouldn't really worry too much about it. So let's take a quick peek at my placeholders for, this is large cap. It was down a little bit this week. Mid cap looks flat. Same with small cap. Let's get into our international space. Down a smidge. Same. International small cap, fairly flat. Let's see, global, and then emerging markets. Again, most of the equity market, again, fairly flat this week. Gold market, flat. Silver, same. Gold miners, down. Let's see, oil exploration, maybe up a smidge for the week. So, all right, well, those are the major indexes and out there. So, I mean, like I said, most of the focus this week was really on the storms down in Texas. Or I don't know if you'd really call it a storm. I guess people let me know. Did you get a lot of snow? Or from the pictures I saw from a lot of my friends in the Houston area, it looked like maybe got an inch or two. But it looks like the worst of it was just the cold and no electricity. So I can relate to cold. It was -13 here on Sunday, and a little chilly outside. But we didn't get much snow from that front that came through that brought all that cold weather down to Texas. But we did get about 8 inches of the white stuff on, I guess, Tuesday or Wednesday. So so I got about, in spots, anywhere from 6 inches to a foot out in my yard. So a lot of fun. So like I said, hope everyone's doing all right. If you have any questions, concerns, something you would like me to expand upon in a video, let me know. Always available. Please like and share this video with friends, family, anyone you think might get something out of this. And if there's anyone out there who needs some help with their personal financial planning, send me an email or use my calendaring to book an appointment with me. I'd be happy to help anyone out there, get their finances in order, get their investments in order, and prepare for what I imagine is going to be a rough ride over the next couple of years. So, hope everyone has a good weekend. Stay warm, and I'll chat with you guys on Monday. And that's about all. Have a good one.